Okay. Yeah, that's good. 50 cents. Yeah, I mean, if you're five wide, that's it's okay. Later in the day, it's like I don't really love the small credits, you know. So today, let's plan our numbers out. So we're based on the close at 64.11. Futures are down lightly, 0.11, so we might have a slight gap lower. Um, Pretty big put level at 6,400. Not really a major support level though. I mean, I suppose let's zoom out a little bit. It's like, would this area right around 6,400 offer some support? Maybe, but I think we have more room to sell off. And FOMC minutes today could be noisy, could be kind of a choppy mess until 2 p.m. with FOMC minutes, which is on high impact just because it's FOMC. Um, we had inflation data coming out of the UK. CPI was a little bit higher. Meeting minutes today, Jackson Hole Thursday, Friday. Maybe the markets get a little bit more excitable here this afternoon. Um, what are the minutes going to say? What's the release going to be? I don't know. I have no idea. You know. So market maker move yesterday was like plus or minus 20, and we ended up having like a 50-point move. It's like that's why I plan the way that I plan. It's like having the market maker at 20 points never guarantees that's all the market's going to do. I mean, the VIX was surprisingly down for the first 30 minutes of the day and then started to go up persistently the entire day. This is why I calculate the levels that I calculate. The VIX rule of 16 is my favorite. Why? Because it tends to keep me out of the way. If I'm really going to say I'm trying to sell the top today or sell the bottom today, basically get a rejection off of a ceiling or a floor, I need to know these levels. Assuming a market maker move is going to be the top or bottom is never the case. It's easy for price to go 50 points up and then maybe pull back to be within that market maker move, right? But it can certainly go higher or lower and then react. So VIX at 15.8, we're going to be talking like close to 1% is potentially that plus or minus on the day. And obviously the VIX spikes up above 16 and goes beyond 16, we have like a 1% plus move to the downside, but not necessarily to the upside. So we should see maybe a little bit of implied volatility today in the S&P that makes our puts a little bit better. I'm still going to trade somewhat small, like widthwise. I think I'm going to go five wide, but I think I'm going to stack up some like sell calls if I can get a decent premium here, 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 kind of stack up some levels and see where those deltas are at this morning. I would suspect that we're probably dropping down to like 64. Question is, are we going to hit 64 and then go up on the day, right? It's like just because I think it's going to roll over is today the day? We could have like nothing happen today because it's all about FOMC this afternoon at 2 p.m. So if the market is just choppy this morning, okay. But my slight bias right now is that I'm just going to try to sell as high as I can, stay with the mechanics of I don't think we're going to go too much higher than these resistance levels, and hopefully I can get a good premium and I can scale in. Okay. Um, let's see here. Yeah, so Mark, did that fill, by the way, that 6410 by '05 put spread made a small amount instead of did you get filled at that? I had some traders yesterday in the final hour session that said that 6410 and '05 got filled. I had it pending for $4, and like I said, I deleted that thing at 3:52 p.m., like 8 minutes before the close. But it looked like at 3:54, the market was down to 64.02, and that was enough to possibly fill that credit. I did see it. I was staring at it, trading at like 350, 355, 360, 370. It was tempting just to change it, modify it, take the trade, and that would have offered me, 370 bucks at the end of the day, which would have basically netted me out to a break-even day. So on the day, I mean, we won daily profit play in the morning for like 30 cents, 35 cents. And then the afternoon one just kind of sat and was pressured all day once we broke below 64.20. So anyway, let's calculate based on a 15.7, 15.8. We'll go 15.72. So 0.98% off of the close yesterday, 0.98. I mean, if we see the market ripping today to the upside back to like 64.70, I mean, I don't think that's the case, but 70 to 64.75. potential top. That's based on yesterday's close. Okay. And then 0.98 is around 63.50. Based on yesterday's close. And I always warn this with the close or the lows is if the VIX is going higher, do not try to catch the bottom. If we see the VIX going to like 16 and a half, 17, 17 and a half, you're going to want to calculate that out. So take your VIX value divided by 16. That could be changing the potential, swings and highs and lows of the day. All right. So it looks like we're going to gap a little bit lower. Futures down about 0.11%. That should put the SPY down about the same. So there's our close yesterday on the SPY. Market down about 0.1%. Yeah, so we'll have it's not even taking out the lows yesterday, which is fine by me. And then we'll calculate based on kind of intraday price action. So let's take a look at our market maker, plus or minus on the day. August 20th. Let's go August 20th. Plus or minus 27. IV's up to 14.3. That's better. We had like a 7 or 8 IVX when we were just slow. Every day was a grind. Every day was the upside. It was down to like 7. Now it's up to 14. Maybe I can get some call premium. Um, I think that the annoying thing is I'd like this market to roll over a little bit. The put premiums are what goes higher. Like you can get a lot of put premiums, but again, I don't want to be too careless with calling bottoms if the market's going to see a slightly higher VIX. Okay. Uh, John, are you guys talking to each other? Sorry, I'm like catching comments here. Probably talking to each other. Yeah. Um, Major news today is going to be your FOMC minutes at 2 p.m. Question is, are we going to see the markets really calm in the morning and then all the drama happens this afternoon? If so, that's pretty good for his standard daily profit play. Um, I'm hoping that I can get some decent call premium around the like 35, 40, 50. Still, just in case, and this is what we have to be aware of. This market has had an amazing amount of resiliency where like any down day is just like viciously bought. So just to assume like I'm just going to sell calls because I think the market's going down. This market could spend days doing this until we come into the end of Jackson Hole or Nvidia earnings. This market could do next to nothing, So just looking at this support. If it's like zero DTE, everyone buys calls today. This market could just go right back up, you know. So I'm still just approaching it one day at a time, making no assumptions, follow the plan, manage risk. That's what we have to do. Okay. All right. But if the put premiums, I mean, I've seen the put premiums are going up a little bit. You can check and see if there's any pricing skew. Like right now, and again, this will reflect, deltas in real price here in about 10 minutes. But plus or minus 27 points in the day, so roughly, just shy of 30 points up or down, opening around 6,400. I'd like to be looking to sell into the, 40, I'd say 45 and 50 zone. I'd like to be selling there. And then obviously reserving some additional trades for the highs of the day here. Because if the VIX spends the entire day going down, then it's going to make it harder to get to that full, like, 0.98% move. Okay. So if it opens here and that's the low of the day and then spends all day grinding, which I don't know what's going to happen, but we will see. So first thing I'm going to look at is if I was going to sell way the heck down here, what do I get for that? 63.50. At the beginning of the day when the expected move is the largest, can I get some credit at 63.50 and hopefully get, I mean, for five wide, could I get 50 cents? If I could, that's a pretty high probability 50 cents. I can also scale into that if it offers a higher premium later in the day. So I think initially, what type of credit do I get just like selling my potential top and bottom of the day? It probably won't be a lot. If I put on a bear call spread here and a bull put spread here, if I can get $1 for that trade, I will take that trade. I doubt that I'm going to get $1 because that's quite a bit out of the money. All right. 50 cents, I'd still maybe take the trade, risk 450 to make 50. That's okay. And I can then scale into slightly bigger trades and better credits as I get a sense of the day. Okay. So we'll see how the day progresses. If I'm in trades this morning, though, I don't want to be holding trades through 2 p.m. today. The FOMC stuff this afternoon could be a little bit messier. We could actually see price catch a bid somewhere, whether it's up or down, we don't know. But that's where most of the volatility is going to be sitting today, is likely going to be after 2 p.m. Okay. All right. I'd like to bring up my scanner for Watch List Wednesday. Let me bring up Pinch Point Scanner. So let's have a look and see what we've got going on for some hot ticket items. Okay. Good. All right. And why is my ticket scanner? Deanna, in the pinch point scanner, can you actually bring up the scanner on your end? I think I need a new token. Go. Give me 1 second here. Yeah, I'm not getting a token access. Or let me see if I can just log in through the classroom. Give me 30 seconds. Okay. Oh, come on. All right. Deanna, I need a new token for my pinch point. I've been kicked out of my own scanner. All right, we'll put a pin in that. We'll come back to watch list Wednesday. I'll get a watch list, and I'll price out some trades. We do have some earnings this week for newsbreakers. We had Palo Alto. Let me take a couple others. We had Palo Alto, which had looks like solid earnings, but faded all day with the markets. That wouldn't have been like a blowout move or anything. Home Depot, same thing, kind of moving up higher. I'm not really interested in where this area is on Home Depot. Toll Brothers, we have earnings or had earnings. This thing barely moved. Target, I saw that they are thinking that the tariffs are kind of a one-off thing. I'm long Target, even though the stock is down. Gosh, man, this stock can't catch a freaking break. I have 75 by 70 ratio spreads on Target. So as long as we stay above these lows from April, I should be in good shape on Target. EL's Estee Lauder. This one tends to have some earnings volatility. Didn't really move. Actually, this is going to be this morning. They came in positive. It's only down a couple of bucks. Baidu down another $3. The stock drives me freaking crazy. Lowe's, nice pop on Lowe's. Up on Lowe's, up on Home Depot. Walmart has earnings at the end of the week, I believe. 21st, so tomorrow morning. I still have a collar trade and covered call on Walmart. So hopefully we're not heading into like double top territory. Okay. Try to get that one. Nope. And what else? Walmart, Zoom, and Workday. Zoom, earnings, Thursday. So we have Walmart, Thursday, Zoom, Thursday, and then Workday. Earnings will be Thursday. Ross, also Thursday. Okay. So I could do Walmart, Zoom, Workday, Ross, maybe pricing out a couple earnings today. See if I can get my uh, scanner access up for pinch point. We have about 4 minutes for the open. All right. So potential top, potential bottom on the day. First thing I'm going to look at is if I can sell some way out of the money trades. That's kind of my high or low for the day. I can just let those sit and marinate too. I don't have to take this trade and just, hey, look, I'm risking $5 to make 30 cents. Even though it's a high probability 30 cents, it's not really worth the risk for me. If I can take that, let it pen for $1, making $1, risking $4, that's totally fine with a high probability move on the day, right? And then I can kind of gauge whether or not we have like a sideways movement. Maybe it's a quiet morning. Why? Because FOMC minutes are this afternoon. Maybe that's all the market cares about, and it's kind of a quiet day. Daily profit, we talked about this many times. Mondays and Wednesdays, are usually like our pretty good days, especially after having a bit of a, higher volatility day where everything was kind of breached, right? Like market makers expected 20 points, it went 50 points. They didn't really defend the way they probably should have. So we'll see if today just kind of tightens up a little bit and that gives us a good morning trade. So, yeah, Rob, that's a good question there. Um, how do you manage risk if strikes are threatened? Well, that's why the spread originally is the most important thing. Like look, risking $400 to make $100 is not a big deal. Like that's about right if you're looking for like high probability wins. You've got to risk a little bit more to make a little bit less. But that's why I reserve like second contracts and third contracts, and I'm willing to, you know, sell a call higher or sell a put lower at a higher credit. Um, and so that's pretty much what I'm doing is either one, I'm starting out with a small spread in the very beginning, so it's manageable risk up front, and two is that same trade or even a higher call level or a lower put level, but for a higher premium. I go from accepting like if I took $1 out of a $5 wide spread, it's like, okay, I'm roughly getting about 20% of the spread. Well, if I'm going to sell more contracts, now I'm looking to get like 40% out of the spread, 50% of that spread. So if I could sell a put for 250 out of a five wide spread or sell a call for 250 out of a five wide spread, that helps mitigate some of that risk and potentially move my lines in the sand higher or lower. Does that make sense, Rob? So it's, this is why I calculate these kind of daily expectations is because if I calculate these levels out between the close yesterday and the intraday highs and lows, typically this rule of 16 is rarely violated. Okay. So VIX has been going down a little bit this morning. It might still stay elevated, right? We might see the VIX go up today and market sell off, which is fine. Um, but it wouldn't surprise me after a down day if this market in a 0 day environment is like, let's buy everything and it's just buying calls today and the market's back up, right? It may not take out the highs, but it could be an up day. And all of a sudden everyone's like, well, we were down 0.59% yesterday, but they see it today and it's green, right? So anyway, let's check some levels. All right, so we have the market opening a little bit softer this morning, just a tiny bit. I'm going to look at my levels here. So can I do, I'll look at my call walls. Can I do like a 40, 50? And let me go 63.50 as well. So I'll jump in here, see if the deltas have been updated, plus or minus 21 on the day. Looks like my 45 and 50 aren't too bad. If I went 45, 55, 50, and 60, I'm definitely not taking that trade for 80 cents. Um, so selling way the heck up here, the 70 by 75, that's way, way, way out of the money. This is offering like no premium right now. So if I wanted like a really safe trade, I'm just going to sell these like highs and lows, but try to get like 50 cents or a dollar on this trade. So I'll sell the 70 and 75 and the 50 and 45 and the 50 and 45. I'm going to try to get this one to pend at a dollar, which means price has to go up or down to fill that for a dollar. But if it does, that's a pretty good trade and a high probability. So I'll let the one marinate for a dollar. All right. So that's going to be a pending order for daily profit play alerts. I'm selling the 64.70 call and then choosing five wide. And I'm doing 63.50 put going five wide. Okay. Now, honestly, for that trade, I could probably go 10 wide, maybe modify that. That would be 70 and 50. So if I go 64.70 and 63.50, yeah, let me see if I can get this one filled for a buck. All right, I'll take that trade. It's a pretty high probability. All right, so pending order, I'll put that in Telegram. And then let me take a look at some other setups. So can I do like the 35 and 40? Kind of get this resistance going on the day. Let's find out. 64, like 20 delta, start here. That's not bad for a dollar. Let me see if I get a dollar. So if I can go five wide and get a dollar on these, that's okay. Got filled for a buck. Okay, so I've got live trades and some pending orders. I'm putting this in the alerts right now. New trade. Today is the 20th. So the trade that's live, that's a 64.40. And then the 64.30. So 64.30, 64.35, 64.40, 64.45. Got filled for a dollar credit. Okay. Pending order. 64.70, 63.50. Okay, so two trades pending. All right. So I'm looking at the 30. Let's keep an eye on this one for the morning. So see if price, fluctuates lower, price goes down. So we're bouncing at 6,400. If we can go a little bit lower towards like the 90.75, these larger, liquidity levels, then that dollar should be offering some profit. Let's see if we can get that one organized. I'd be happy taking like 75, 80, $90 out of that trade for profit this morning. So majority of that profit. So this is the DPP. BC just means bear call. I'm just doing a bear call combo. So I pulled in a dollar and it's break even. So I'm going to see if we push down in price. Let's say that we, maybe fill this gap here and hit like 63.75. Let me set a chart alarm here around 63.80. Okay. And see if we're coming down to these levels, what that dollar is offering. I'm going to put a closing order. Um, put a closing order around, let's see if we can get a closing order around like 10 cents. So I'm going to try to take 90 cents out of that max dollar. And then I can also add more contracts if we do come back up to these levels. Intraday, low so far. Let's say we move up. VIX is at 15.7. That is 15.7, a 0.98% move. So based on this low, do we go up 0.98%? I mean, that's the 64.60 top instead of 64.70. Okay, so let's see what price gives us. I could see going here. Your second trade daily profit play is incorrect. 70, 80. Oh, you're right. Sorry. Those need to be puts. Sorry, those need to be puts. The 63.50 is a put. You got it. There. It's been fixed. Okay, nice snapper. Filled it at $1.05. Good. Okay. So if I can get a trade in here, so I've got the 40 and 45. If I could sell the 50, I'm going to try to stack up some call sides here. So if I did 50 by 60, 55 by 65, I don't mind stacking up some of these orders. And this one I'd want to get filled for, I would like to think like $5 between the two of them. If we're going to threaten anything, like give me some good credit. I'd accept $3, but I'm going to try to go after 5. All right. So let me do this. While things are kind of chillaxing here this morning, I'm going to throw on a standard daily profit play. We got 30. If I go 17 delta, try some of those deltas. So 17 and a 15. So I get over $2 on this trade. I'll try this one right here. See if I get 220. And that is a 16 delta call side and a 16 delta put side. All right, so I have another trade in, new trade, SPX. Selling the 64.30 call, buying the 64.40 call, selling the 63.70 put, buying the 63.60 put, 220 credit. All right, so if I'm in that for 220, I go 75, so 25% take profit, I'd take a debit at 165. 165 debit gets me $55 on that trade. Just hit the take profit. Okay. So making that update in Telegram right now. Setting a 165 debit. We're closed. Yep, it's in Telegram. So daily prop play alerts and Telegram. Um, Trade is in, pending order. Trade is in. So follow Telegram for the daily prop play alerts. Okay. Maria says can't get filled offering 0 cents. Well, what trade are we talking about? I'm in two trades right now. I'm in one trade for $2.20. I'm in one trade for a dollar. That's now trading for like 70 cents. So that bear call spread is showing a little bit of profit. Um, the very wide one is trading for about 55 to 60 cents. Maybe I get filled for a dollar. So that one fills. That's a pretty good play on the day, I think. Trying to take most of that like dollar credit if possible. It's not filled. I got filled for a dollar on the bear call spreads. That should be trading for probably 75 to 80 cents now. So that was a little bit more time sensitive. You can let it pen. I mean, prices can oscillate. You can still get filled at a dollar. I'm just looking to see, I want prices to stay below these levels. So the trade that I took this morning, that was for a dollar. If price is going lower, that dollar should be trading for 80, 70, 60, 50 cents. That's profit. Okay. The other trades are kind of boxing myself in with like highs and lows of the day. So let me um, get my levels here. So I have the bear call spread, which I'm looking at defending. The line in the sand is at 64.30. So I've got the 30 and 40 levels that I want to be watching. So 30 and 40. And then I have the 30 and 40 on the call side and then 70. So 30 and 70 down here. There. 63.70. This should be right at 64.30 and 64.40. All right, so what I'd like to see price do is if price stays right in the middle, then the trade that is this level, that would be profit. Okay. As more time passes, the bear call spreads, the price is here, here, here. The expected move gets narrower and narrower. I don't want to hold these trades necessarily past 2 p.m. Hopefully price is either, continuing to slide lower and that bear call spread will continue to pay. Okay. 994, 995, 996. Got some trades in for today. Center price is around 6,400. And I might get the other put one filled. So trading at 65 cents right now. VIX is going up a little bit. It's 10 wide. I'm going to try to get this one for See, that's way out of the money, but let's try a $2 fill. Okay. Look, I post the trades in Telegram. If you're a member for Daily Profit Play, I post the trades in Telegram. I post them in the tracker. So Telegram on your phone, Telegram on your computer, Telegram on a tablet. Nice, Rodney. So you're already out of that bear call spread. There you go. Yeah, let's take a look at that one. So bear call spread is here. So that dollar's already trading for $45. So this is profit. I'm going to try to pull a little bit more out of that if I can get this thing down to, offering like $80, $85, $90. That'd be my max credit at a dollar. So I'm going to take as much of that as I can. So I've already got the pending order at 10 cents. I'd settle for like 80, 85 bucks. If I can get 80, $85 on the trade, I'll take it and have like no risk on the day. So that's not a bad spot. And then this trade got in for 220. It's trading for about 250 right now. Looks like the put side might be threatened a little bit. Yep, if price is going to be directional for right now. Okay, and VIX is over 16, by the way. So that's why I'm saying like potential bottom. But if we go from the close and we're looking at about a 1% move, that puts us right around 63.50, right? That's a 1% move. We're at 63.48. So if the VIX is going to stay at 16, maybe gets to 16, 16.5, like I don't know what the VIX is going to do today. If the VIX wants to go up, is it going to go up and stay up? Right? I mean, if that's the case, you could sell, I mean, you could sell like the 20, 25, 30 bear call spreads. So let me take a look here and see. Give me a second. Construction has started for the morning. Let's see what the 20, 25, 30 levels look like. So if I did a 25, 35, get a $1.65 there. Okay, we'll see. I mean, the safest trade is like I'm selling calls up here. The more price pressure that goes to the downside, there is potentially some bouncing in here. Like this is what I don't see very often. I don't see very often price just dropping without having these like put walls acting like a bit of a floor. Let me see if I can find it on my dynamic trend. See what these levels look like. Nice, David. Okay, so where are we at ATR wise? We've hit the 50% ATR and we have 100% ATR around the 63.75 zone. Okay. So with real-time zero DTEs, most of the flows and liquidity today is going to the downside. But what I rarely see here is between the 50% and the 100%, I rarely see prices exceed these levels. These act as floors for a reason. These act as ceilings for a reason. So two levels I could see the markets kind of bouncing at would be right around here and right around here. All right. So I'm just like, don't just jump in and say like, I'm just going to sell a call right there because it can't go up to the top of the day. It totally can. We can go from a 50% ATR all the way back up to this gamma flip zone, and we could go up to the other 50%. It's like it's just intraday price action. But on the technical side, which I've been just patiently waiting for the last couple of weeks, since we've broken this trend line, right? We finally broken this trend line. I think we're rolling over. And this is a bit of a correction that I've been waiting for, now this like noisy move from the 31st to the 1st. We finally broke that trend line rolling back in. I think this market has a much easier path to the downside to just kind of let this correction happen. Okay. The bear call spread should be looking pretty good this morning. And my $2 fill is trading up for about $1.10. I'm going to stay out of the way on the put side. I'm going to go ahead and, as much as I want to get filled at the 63.50 by 40, I don't want to call the bottom today in case we just have like a, blow off low. But what I can do is I can kind of guess at the bottom if I get a much higher credit, i.e., if I'm going to go five wide, try to get like $3 or $4 premium for that trade. If you want to stab at the bottom, um, I'm going to cancel this trade here. So the 64.70 by 80, the 63.50 by 40, I'm going to cancel that trade. Okay, so DPP update, bear call spread, doing great. Setting 0.10 debit to close for 90 cents out of max $1. Going to make sure I'm collecting high credit and low risk. Example would be, $5 wide for a $3 or $4 credit. So if I'm wrong, I'm wrong just barely. But I'm gonna let price just kind of do its thing. Price falling, we're already falling towards like the 100% ATR. Okay. So what this helps me do is if I'm looking to sell like a bottom today, um, I want to see if the VIX is like running nuts. Like if VIX is going nuts, like do not call the bottom today. Okay. If price is going to find a floor, if price is going to find a floor, great. Our bear call spread should be showing some pretty good profit right now. It's already up 65 bucks out of the max dollar. Our condors, by the way, this is waterfall income. Waterfall income now is up 75 bucks. This one's up 95 bucks. This one's back in profit. We have all three of our call condors in profit now. All these are good. This one expires next week. This one's out to September. We're up like 76%. This one's up 43%. So everyone's been asking, like, what about those call condors? Well, now they're starting to pay some profit. Okay, so pending order to close this one out. Uh, when do you abandon? I mean, I canceled it just now. Like I canceled that trade at 9:51, so 2 minutes ago. And the reason I'm canceling is because if this thing is going to fall, look, potential bottom is based on the previous day's close and a VIX at 15.7, not a VIX at 16.46, right? So what are we seeing for the morning? The VIX is going higher. Do not call the bottom if the VIX is going higher. Okay, because now this bottom, if we go 16.6 on the VIX, we're looking at a 1.03% move from this intraday high. Okay, or the close yesterday. So 1.0 and change. It's like we could go to 63.40 today, 63.40, it could be a little bit lower, you know. So just saying, like, don't call the bottom. Canceling. So the only trade that I have running right now is I have an iron condor that's going to be threatened at the 70 level, and I have my bear call spread, which is probably going to be full profit. Okay, so I'm just going to make a note here. Watch the VIX for a lower low measurement. Okay, I mean the VIX is on the rally. Okay, now market makers don't just run and hide. It's like their job is to properly hedge. So we've already hit the bottom of our gamma levels. We've already hit our 100% ATR. Oops, let me get this back here. So is as crazy as it was this morning. Oh my gosh, what do I do? Listen, the markets rarely go past what are calculated. The options market, it's super, super sophisticated. All right. And it's also efficient. So the fact that we've hit the 50 and we've hit the 100, do not be surprised if the market can find a low in here and then work its way back up. If it goes lower on the day, well, it's one of those days where holy crap, look at the market go. And what have we been talking about for weeks? A freaking correction that we're finally getting, you know? And what's the correction? Probably 3 to 5%. But everyone's losing their minds because in the day you watch this thing, it's like, oh my God, the market's down. What happens on my one trade today? Well, maybe we take on some risk. But I've got hedges, I got waterfall income, I got call condors. It's like this stuff is supposed to happen. So we're hitting the 100%. If we're going to find some support, this is a pretty good spot to find it. If we find some support, this is about where we'd find it. Okay. Could we exceed the ATR by? Of course we can. We can exceed it. Look at this. This is all puts right now. So this is not a fun Wednesday, right? So far, like we're right out of the gates. This market, it's like this market finally has permission, based on the technicals I've been waiting for a week or two now. The market finally has permission to sell off because it was just a big, nasty, noisy range that kept building support, 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 and then it rolled over, got back below this July 31st high, and now it's open space to fall back down. So I'd say the bears can just quickly take prices back down to like 62. If it gets a little bit nastier, probably 61 or 6,000. And that's the correction we've been waiting for. And I will still look at buying dips or positioning for dips. But my dips are going to be at this moving average, at this moving average, at this moving average. I want some dips in here. I don't want to buy highs. Okay. All right. So, um, right now, just I just want to assess some levels because I might pop in another couple of bear call spreads. I don't know if the market's going to go necessarily lower for the day, but I think if we can stay out of the way, selling like a 20, 25, or even 30 wouldn't be a bad spot. Okay. So if I could sell like a 64, 30, or 35 again, let me see if I can get any more premium for that. I might just try to sneak in some more profit. If I sell a 30 and I get another 40 cents there, that's not good. That trade and that trade. I can grab another 30 cents. Um, Maybe this thing would offer like another dollar. I'm just going to redo my trade. So I'm already in for a dollar. I'm going to double up my contracts and just try to get another dollar, which means if price goes up, I can get filled in this trade for another dollar. Okay, so I'm going to sell another 64.30, call, buy the 64.35 to go five wide. Okay, so I'll show you right here. I'm going to sell this same trade, buy this trade, sell this trade, buy this trade. It's only offering me 30 cents. I don't want this trade for 30 cents. I want this trade for another dollar. Okay, so I'm going to put in a pending order at that trade for a dollar, see if it fills. It probably won't. If price stays where it is right here at these lows, I won't get filled for a dollar. I'll just keep my full dollar bear call spread, which right now the dollar credit is trading for 71 cents. Or I'm sorry, it's trading for like 30 cents. I'm up $70 out of the max 100. Okay, so at this rate, that 10-cent debit, I'm trading for 20, it's a 25-cent debit right now. I'm going to go ahead and just replace this down to 5 cents and take most of the credit. So I'm going to modify DPP update, bear call spread combo update, changing pending close to 0.05 debit. Also repeating this trade for another contract for a $1 credit. So I'm selling the 64.30 call, buying the 64.35 call, selling the 64.40 call, buying the 64.45 call, $1 pending. I'm going to see if I can add another dollar credit on the day. All right. Now, market makers had their backs against the wall. Why? Because price directionally was right out of the gates going right to the 50% and right to the 100% ATR. Okay, well, now their job is to try to properly hedge. That's going to work one of two ways. Either they're buying the crap out of this thing to recenter this, or they are buying tons of puts to drive this thing lower to properly hedge, right? So I think after hitting a 50 and 100, we're probably going to see prices here, maybe go back up, maybe recenter. That's what the daily profit play can help us with is we can get price to go down for the morning, back up again, and then go sideways, right? And all it is just a scary 30 minutes that ends up becoming noise. It's down for 30 and then it goes back up later in the day. And we wait and see what happens at 2 p.m. But I'll probably be out of all my trades for profit. Okay. So I will see if price comes back into some of these, like, we just had a pretty decent fall. If price pulls back to, 63.90, 63.95, then my iron condor is going to be fine. Okay. So this trade, one, two, three, four. So this trade's down about 190 bucks, but I've got the take profit sitting at $1.65. If price comes back to like 63.90, 63.95, it's probably going to close for profit. So I'm just going to let it marinate for the day. It's defined risk. It's okay. And if price cooperates, I mean, having a day like yesterday when it's all down for the day, it's rare to get two of those in a row. So I could see, yes, we started lower, but we probably will kind of recenter, and then more news is going to be around this afternoon with the FOMC at 2. Okay, VIX is jumping pretty aggressively. So I'd say don't try to be a hero today, and certainly don't try to call the bottom, right? As tempting as it is, like try not to, I don't know. I'm just saying I'd rather be safe than sorry. Don't try to call the bottom if the VIX is going to spike to like 17, 18, 19. This is the first time the VIX has really come loose. Okay. You have to also be aware that if the VIX jumps to like 17, 18, 19, all of that forced volatility suppression goes away, right? There are literally funds that all they do is they sell VIX. That's all they do. So when the VIX starts to show elevated levels like 17, 18, 19, all that suppression, all those forced calls, all that reverting that they plan on for the VIX, they all just stop trading. And that's where the VIX has those giant jumps where we go from like a 16 VIX to a 20 VIX and then a 20 to a 25. That's when things get a little crazy, right? So, everyone loves to sell volatility. It's like volatility's been super, super suppressed this year. But once we see a move like this from 15, I mean, this started at like 15.6 to 16.8. Like you don't see VIX go down that quickly, but you see VIX certainly rip like that. It's up 8%. So just saying, like, I'm not going to call the bottom today. Okay. If I were to say based on the current VIX at 16.35, that's going to be just over a 1% move. So we had about a 16.5 VIX. Now it's a 16.4. So about a 1.02% move off of this level. So 1.02% puts us around maybe a 63.45 to make a slight modification here. So 63.45 to 63.40 with VIX greater than 16 for right now. Okay. But if for our price action today, we go down, hit the 100% ATR, pull back, my iron condor is going to be fine. My bear call spread is still way up here. It's probably going to be fine. Okay. Look, I know during these daily prop play sessions, a lot happens, and a lot happens what seems to be a short amount of time. But this is why we jump in the markets every single day. This is what we do. You know, if you're looking to make some income in the mornings, you got to be pretty nimble on the keyboard or the mouse to place these trades and be comfortable navigating your broker platform. We have a game plan. I calculate my levels. My plan today was to be selling calls. That's why I did the bear call spread combo. And right now, so far, so good. Okay. So this is up 80 bucks. I mean, if this gets to 90, 95, I'm just going to take the profit. That's rather than sitting on this thing all day. Is it worth it for me to take on all the risk to make an extra $5 today? I mean, to me, no, it's not, right? Right. And then my call condors we've done for waterfall, we're getting more profit. We're getting more profit. This one's worth $1.60. I'm getting 90 bucks out of it right now. This one's worth $1.25. I'm up $95. This one might be worth protecting sooner than later because I have more time in this one. This one looks pretty good. This one has more time, but it's also my highest strikes. Um, we'll see. I just think if we have a reasonable correction, these all look pretty good. All right, so let's get a pulse out there. How are we doing? Is everybody okay? Anybody panicking? We okay? Look, market's clearly selling off. Technically speaking, I've been waiting for this for a couple of weeks. Am I crazy bearish position in my portfolio? No. But I've got some hedges, I'm selling some premiums, and I'll just continue to prune and chip away. But we do have a October trade that I put this in the futures market. I'm curious how this is doing right now. Probably not great, but we'll find out since VIX is actually spiking up a little bit. Um, Neither of these are paying out yet. So this hedge that pays potentially like $3,000 to $4,000 is down 80 bucks. But if we have a big enough spike to the downside, then volatility could change enough so that maybe this offers this trade cost me, by the way, like 250 bucks. Okay, so this trade that I'm highlighting right here, this trade cost me in the futures market $250. Okay, that's the most I can lose. The potential profit was $3,000. Okay. So if the market loses its mind for a week or two and we have a big spike and the VIX jumps up to like 25 or 30, this will probably offer me 250, $500, $750, $1,000 worth of profit. I'll just take it. What that helps me do is alleviate some of the downside. I can manage some of these drawdowns. I'm still positive and I've got time on my side. I just keep selling calls. I keep selling premium. Okay. In my opinion, this is not a major, major, major top in the market. This is the needed and probably much needed pullback to give us a bit of a correction. Okay. So it just gives us a bit of a correction. So be it. Okay. One thing about 0 day trading is you have to manage risk so you can always survive the day. Okay. Today was pretty easy. Just take a bear call spread, right? Bear call spread. That was a great trade. That's the focus. I wish I sold 10 contracts, not one, you know, but the VIX is jumping. We're at 17 VIX right now. That's what I'm saying. Don't call the bottom. As tempting as it is, don't call the bottom because all I'm seeing in real time is more and more levels are lining up. We're way past the 100% ATR. That doesn't mean anything. Okay. If we go 125, 150, 200, there is no reason to be like, it can't go more than this. Yes, it can. Okay. So the goal for today is we're winning on the bear call spread. That's great. I'm not going to call the bottom. That's why I canceled that $1 trade to try to call the bottom at 63.50. I don't want to call the bottom. If the VIX is going to spike up to 20, I don't want to call that bottom. Okay. Now, in reality, if we go, I mean, do we think that we're going to have like a 2% sell off today? Probably not. So if I was going to get somewhat brave, for the rest of the day, it's like I could probably look at, okay, we started here for the close yesterday. Are we going to drop 2% and be down to like 62 and change? I mean, I'm just going to look at prices. Could I sell a way, way, way out of the money put right now and get anything for this trade? The market's going to drop 2%, which means the VIX would have to be at what? The VIX would have to spike up to 30 today. Okay. So just for, I mean, if I like the trade, I'm going to take the trade. But if I go to a 6,300, okay, if I go to 6,300, look at this. Like I can still see like a dollar credit at a 6,300. So are we going to see the VIX spike to 30 today? Probably not. I don't think so. But is there risk in the trade? Of course there is. So what's this offering? If I did like a 2% move on the day, that'd be 62.80. Okay. So could I do a 62.90, 80, 85, 75? So I'm I'm sitting here telling you like don't call the bottom on the day. It's like what am I considering? Well, if I'm gonna call the bottom, I might as well get paid for the bottom. Okay. Rich, if you already have the trade, remember what levels we're at, right? It's 10 wide, so you know what you're risking. You got filled for a dollar. What's your line in the sand? 63.50. Okay. Um, so if you got filled at that six, if you got filled on that 10 wide dollar credit, where do we take the trade? I base the trade off of these initial numbers, right? Up here and down here. Okay. You realistically probably have I'd still say about an 85 to 90% chance that that trade still works out. But worst case scenario is what would happen, Rich, if price is less than 63.40 today? What happens? Because you would have sold the 63.50, right? This would be a -1 and then a +1. So that's your spread. That's potentially $9 risk because you're taking in a dollar credit for both trades. So your call side's going to win, your put side's going to lose, which means you have $9 risk. That's the worst thing that can happen is you lose $9. Okay. Well, guess what? You survive and you come back and trade tomorrow. But based on the probabilities where we're at, we're beyond 100%. If there's any reflexiveness to the market, we come back up. If it's above 63.49 today, you are not going to lose any money. So if you're in the trade, this is why I say we know what the trade means. Where's the line in the sand? Where does price have to be for me to take on risk? Where does price have to be for me to take on profit? The probability of the trade is still high, right? Do we see the markets always just dump straight down? Of course not. Do we see the markets always rip straight up? Of course not. The market has ebbs and flows. Okay. So I'm going to put in a trade here for myself, a 90, 62.90 by 80. This trade, if I'm going to get this trade to fill, I want $5 credit. This means the market's going to have to absolutely plummet today, but I'm going to try to get this big fat premium. Okay. So I will try a $5 wide bull put spread. Let's see if this will take. Work. Oh shit. Sorry. That's not the. I don't want this to be in futures. Damn it. All right. So can't. I meant. I'll go SPX. SPX. I accidentally put it in MES. Make sure that my MES trade didn't fill. That's stupid. MES. All right. This should have been canceled. Yes. All right. Good. Okay. SPX. 62.90. Okay. 62.90 by 80. If this trade's going to fill, give me $5. I mean, realistically, like, kind of give me $3. I'd be okay with that. Give me $3. Give me $3. I think those are good. But you know what? If we're gonna have like a crazy stupid day, give me $5. I'll take the $5 risk. I don't think this will fill, but I will watch this trade. That's a 90 by 80. That's a 90 by 80. If I do the 85 by 75, give me $5. So pending. Now, that gives me a lot of room for error where I don't think price is going to drop all the way down to 6,300 today. I don't think that the VIX is going to go to 30 today, which is literally what would have to happen. We'd have to see the VIX rip to 30 today for that trade to really be threatened, which also means it probably won't get filled. It probably won't get filled. And Rich, to your point on the 63.50, we've gone straight down for 45 minutes. Okay? Straight down. So what is the rest of the day going to do? Well, the rest of the day, who knows? But I would imagine that this market is probably going to have some bouncing. Whether it goes down, 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 and then tries to finish the day back up, I don't know, right? It's all puts right now. And this is this is the slide that I have been talking about. And it's not me like, Christian talks about selling the market. No, it's just like we should be expecting a correction. And now when it's happening, everyone's like losing their shirts, right? We should be selling. We should be selling calls. And it's nice that it actually is cooperating because I've seen bear slides in the market that are much harder to trade. If the market goes down, not every day does it just sell off. We've seen markets do this. So if we go from a high to a low, we could have intraday price action that does this. Okay, market sells off one day, and then the next day it gaps up, okay, and then stays there for the entire day, and then the next day it gaps down, and then goes nowhere for the day, and then the next day it gaps down, but it goes up for the day, and then it goes down here. It's like there's no way to guarantee that intraday price action is going to be just a smooth sell-off every single day, right? The destination is we're going to have a correction, okay? And that correction could be as deep as 4%, 5%, 6%. I think we could have a 10% correction. I really do. There's enough noise in the market. There's enough uncertainty. This climb the wall of worry. We're too concentrated in tech. The Mag 7s. I mean, do you know this stuff? Like 60% of the S&P earnings this year is literally like Mag 7 and all the crazy tech stocks that have ripped since April. 60% of earnings gains have been just because of tech. It's so heavy. It's so concentrated. It's scary. So this rotation is, it can be fast. It can be nasty. I can see the indexes having 5 or 10% corrections. But this also gives us a good opportunity to sell premium, you know? So as we are selling off, as the VIX is jumping to 17, look, this is why, and I'll talk about this more. I'm going to talk about this today in Profit Panel. I'd like you to join me at 11 o'clock for Profit Panel. We're just starting. We're just starting for this little sell-off correction, which is maybe a 5% move, maybe a 10% move. There's still a lot of support. Okay. In fact, let me do this. Let me use an arrow here while you're all watching. Let me use an arrow, and I want you to tell me based on type in like buy, type in BY if you think that if price came back here, would you be willing to buy the market? If price came here, would you buy it? Yes or no? Would you buy the dip if price came down to this previous all-time high? Would you be interested in buying the market here? Yes or no? Type in buy if you'd be interested in buying it. If not, then don't type anything. How about down here? Okay, so Donna says buy. Okay, so Donna's willing to buy at the previous all-time high. How about if it came a little bit lower, towards like 6,000? So we go from a 6,400, 6,480 high all the way down to like 60, let's say 6,000. Who'd be interested in buying the S&P at 6,000? Okay, buy. Would you be interested in buying it if it was down here at 5,500? Would you be interested in buying it here if it came down to the lows in April at 4,900? Okay. Listen, the reason I'm saying that is because for some reason, most of the retail crowd, when markets are down to 58, 57, 56, 55, 54, people are panicking and selling. Okay. This is why we need to have cash available to buy great discounts. This is why I still have over 2 million of my portfolio sitting on the sidelines because I want to be selling premium and collecting income because this is the opportunity I've been sitting here patiently waiting for. Okay. So today at 1:30 p.m., I'm going to talk about a strategy that gives me a ridiculous buffer and margin for error, where even if price is going to fall 10 or 15%, I can still make money. And I can also collect higher premiums along the way. Okay. And it's one of my two core strategies in my waterfall income. We had a great class yesterday just talking through the core strategy. Today I'm going to talk about really like one of my favorite trades, which is one that I do almost every single week. And that is I basically do this. I have this margin for error. Okay, price goes higher. I had a margin for error. Price goes higher. Margin for error. Margin for error. Margin for error. I'm kind of boxing these in like this is like a week-long trade. Okay, a week-long trade. A week-long trade. A week-long trade. I just keep doing this. I keep doing this. And what I'm doing is essentially I'm always giving myself about a 10 to 15% buffer in price. which means that at any time, this market can pull back 10% before I take on any risk. This market can pull back 15% before I take in any risk. Okay. And that is to me one of my favorite income plays, doing this like 40, 50, 60 days out. I've been doing this since the start of the year. I've been doing this, and this is like one of the ways that I made, almost 20% profit in 2022 when everybody was down. 2022 was a challenging market. Okay. Because of this strategy and because of some currency trading, I managed to get closer to like 30% for the year for my portfolio. It's like 28.5%. That was in a terrible bear market for most traders. Okay. So it taught me a lot about being like trading with a margin for error, trading with a big buffer. And I've kind of kept that strategy rolling ever since. Now, when the markets are up, this strategy, like it makes, consistent safe income. It just doesn't pay a ton, but it's a nice like 5 to 7% buffer every year with profit. And I don't have to take on a lot of risk. It's all risk defined. I can place this trade every week. And if the markets get a little haywire and a little wonky, then I calculate it out. I also am willing to own some shares of the underlying, like the SPY or the Qs, and I own shares and repair them. Okay. So anyway, I'm going to talk more about this today during Profit Panel, and I've got a class today on it at 1:30 p.m. We're literally going to talk about this advanced strategy at 1:30 p.m. all day. So it's going to be like probably a 90-minute session, and I just want to give you the mechanics of this trade because the nice part about this is the equity curve is going to be something like this. Silky smooth, 97, 98% wins with the ability to repair losses. That's the nice thing too, is if you have the cash, which maybe you don't, but if you have the cash to own at least 100 shares of the SPY or at least 100 shares of the QQQ, even a loss you can wash a loss within like 2 to 4 weeks typically. Okay? Because I will say this, how many of us, and heaven forbid the market's going to sell off 20%. Okay? But what if it does? If the market sells off 20%, the market sells off 30, 40, 50%, we have to be thinking, what am I going to do in my portfolio to survive that type of move? And shouldn't I still be excited to buy? I mean, if you can, number one, survive it, number two, potentially not lose money during that market move, and also have some dry powder to reinvest at a crazy discount, that's where wealth is created. Okay, think about these markets these last 10 years. I mean, let's just zoom out on this. Let's go to the weekly chart here. Think about these markets. Okay. If you are a trader in the markets, and we have seen this is going back to 2000, let's just talk recent. Let's just talk great financial crisis and onwards because look, if we have a great financial crisis again, what's the worst that can happen? We probably see like a 50% correction in the markets. That's probably the worst that can happen. Okay. But right now, is that going to happen? With Donald Trump being so pro growth, with the Fed that's likely to be cutting rates, look, the US can roll into recession, maybe, but I don't think we're going to feel the same pain of everything is in a recession. Because you know who can experience a recession? Main Street. You know who's probably not going to feel a recession? Wall Street. Big difference. Because what's Wall Street going to do? They're going to keep trimming numbers, keep like not hiring. They're going to do more with less. They're going to spend all their extra profits and margins on AI, and they're just going to try to be bigger, badder, more lean, more mean, and more profitable. Right? So Wall Street's going to be fine. Wall Street, if it's a reflection of that in the economy or the reflection of that in the stock market, the economy might show higher highs. And meanwhile, Main Street's losing jobs. People are struggling. People are frustrated. Inflation's still persistent and annoying. So, I mean, if we had a 30, 40, 50% correction, do you know how much money is made if you can buy? Just think about this. If you have dry powder and every time we get a 10, 20% correction, you're buying dips, okay? And every time we have a 10, 20, 30, 40, 50% correction, which obviously doesn't have very often, you buy the dips. Do you know how much money is made over these years? Tons, right? Wealth that can set you up for, decades to come. Push you in a position where this doubles your money coming back. Okay? This doubles your money coming back. It's crazy. Okay? These little dips, these 20% corrections after they go up, I guess if you're down 20%, rule of 72 is if you're getting a 20% discount, that would have to go up. I'm trying to think. If the market's up, what's the recovery? 35%? If you're down 20, I think the recovery is like 35% to get back to all-time highs. give or take. Maybe it's 30%. But I just want you to think about that. These numbers are staggeringly big. When the market's down 20% and it takes a 30% recovery, if you can get anywhere near that 20%, it doesn't have to be the bottom, but if you just start participating at discounts, getting back to those highs and going higher, so much money is made. That makes sense? So I'm just saying, this is not going to stop. These markets going down aggressively, up aggressively, down aggressively, up aggressively. I think this is the new market. I think this is what's happening. This is what trading is now. It's zero DT. It's crazy hedging. Sometimes it's there, sometimes it's not. But the cycles of like the market was down, you know, down 1% today. Well, what's happening? The market's maybe going to have a 5 or 10% correction. Well, what's happening after that? Probably a dip. I mean, do you know how disappointing it would be to see this market go from a 20% correction to a 30 plus percent rally to another 30% correction? Like Trump would absolutely lose the midterms if that happened. So he does not want that. The Fed is looking to cut rates. And I know this has been climbing this wall of worry, and nobody knows what a recession is going to feel like. People have probably felt like we're already in a recession since 2020, since 2021, since 2022. But what's the stock market done? It's gone higher. You know, the market's gone higher since COVID's crashed, since 2022, since 2023 and 4 and 5. It's like the market doesn't care. So, as a trader, discounts and declines in the market should be seen as opportunities, not something to run from. Don't run from the market falling. Okay? Be ready to trade smart. All right? So, like I said, I've got a screenshot of this. I'll share more of this. We'll hang out for 30 minutes or so. Let's go here. Okay. Let me go. This is what I'm talking about today at 1:30 p.m. So day 2 of my masterclass workshop for waterfall income. Today is going to be deconstructing the advanced flexible strategy. We have a huge margin for error. There's a little bit more to it. It's typically like a 4-leg trade, but it's defined risk. So even if the market went, down 20, 25, 30%, I still can't lose more than I put into the trade, which for me is generally less than 1%. And it's a super high probability of profit. And I give myself anywhere between a 10 to 15% buffer for income every single week. Okay. So is it hard to maintain that? Is it hard to manage that? No, it's not. Because a lot of these levels are, do we expect a 10 to 50% correction in the market? If your answer is no, why would we not take this trade at defined risk every day or every week? Make sense? So if you're interested in learning this, join me. Waterfall income will be today at 1:30 p.m. for a masterclass. I'll talk more about it at the top of the hour during profit panel. So, anyways, I mean, I'm planning on it being pretty fun. Is Iron Condor still viable? Yep, I'm still looking to get a profit out of it if I can. I need price to get back above 63.70. So I want to see some reflexivity in the market. If we get it, we're already well beyond the 100%. So if the market is going to go, and by the way, who remembers what was the plus minus today, by the way? Plus minus on the day was 27 points. How many points have we already fallen? Market opened up today at 64.06, already dropped down to 50. It's down 56 points. It's more than double the market maker move again. Okay? So that little plus minus in the morning guarantees nothing. It should be where the market makers are playing within like the highs and lows. But the reality is, if the markets are seeing flows this way, all market makers are going to do is going to buy more puts. They're going to buy more puts and they're going to turn a delta to zero. They want to be a delta neutral firm. That's what market makers are. So they would just be buying crap tons of puts to hedge. And so if the market goes down all day, they're just trying to get zero. So it can certainly go beyond, whether it's to the upside or downside, it can go beyond that market maker move. Now, usually there are guardrails. I mean, I'm seeing that this is a larger liquidity level around 63.50. Okay, so we sold off 50 some points today. Do we go down for the day and then we come back up? And it's just like, wow, what a crazy 30 to 40 minutes of trading, but we still finished halfway, right? High, low, pulls back here halfway. Maybe it's high, low, pulls back halfway and tries to finish near the lows today. That's fine, whatever. But there's still a lot more time to go in this trading day. To make this daily profit play work, you need to take, no. I mean, all I need, look, if you want to do a standard daily profit play, one trade a day is fine, win or lose. You win 90+% of your trades, a losing day like this is because something stupid happened, honestly. Most of the time, if you take one standard daily profit play, you're going to win probably 9 out of 10 trades. So what I've been doing is, look, in a 0 day environment, I'm okay like trying to grind out for more income. So how am I doing that? Well, I'm going to sell some more bear call spreads. I'm going to sell some more bull put spreads. I'm just taking some stabs at the market. But for a standard trade every single day, I just take one trade and that's it. Win, lose, or draw. Don't overtrade. You know, um, there's no reason to. Let the markets be the markets because a losing day would be something like this. A losing day would be, oh my gosh, I cannot believe that the market just went straight down for 60 straight minutes. Well, yeah, that's probably not fun. And that's going to put our position in a 0 day environment at risk. But if I'm only risking 5 wide, if I'm only risking 10 wide, I mean, that's the most I can lose. If I lose on that iron condor today, I'm going to lose like 700 bucks. Okay. Can I come back and trade tomorrow? Yeah. And I can trade for the next 20 days and not sweat it at all. So, anyway, I can't express enough how important it is to put risk. Like if you have a sticky note, if you have a neon sign, risk, 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 risk management. That's the most important thing. Because if you can manage risk and tolerate risk and never flinch at a loss, you're a much better trader than everybody else. Because that's what good traders do. Good traders can tolerate risk. They know you have to take risk. You know you have to take risk to make gains. Okay? So what do I need price to do today? Well, if price is greater than 63.50, that $1 wide iron condor that we did is still going to pay $1. Okay? If price is greater than 63.70 today, then I got 225 on another one. That will still pay 225. So I still have, $3.25 out there for profit, but meanwhile I'm looking at that $100 winner that is pretty much, I'm not saying guaranteed, but kind of guaranteed. I've got a debit set at 0.5, 0.05. So I'm trying to take as much out of that as I possibly can. All right. So for the day, like I'll win the day. It'll be fine. If I lose here, like if I lose here, I survive and I come back and grind it out tomorrow and the next day. All right. But when you're getting hit, like if you're taking a loss, remember this. It's all about managing risk and it's all about showing up the next day. And also it's about noticing like the market is doing some pretty stupid stuff. This is not what the market does on a normal basis, right? Daily profit play, you can look at this chart right here and see, is this what the market normally does? Yes or no? Is this what the market normally does? Right out of the gates, just drops. That is the rarity. That is the exception. Okay. This is the norm. That's profit. This is the norm. That's profit. This is the norm. That's profit. How about other days? Up and down. That's profit. Up and down. That's profit. Down and up. That's profit. Okay. Sideways. Profit. Up and sideways. Come back to center. That's profit. Okay. Down. This is another one. This is probably a not fun day right here. Now it was choppy enough in the morning that could have been a profit, but most likely it got away from us. But that was not a great day because what did price do? Look at what price did. It just went down all morning, so not great. What did price do here? Sideways, perfect. Okay. Normally, price doesn't do anything other than that trade would be tough, right? That could be a difficult day. So that's not fun to pack like back-to-back days. But in 996 trades in daily profit play, we've never seen more than like 2 losing days in a row. Because it is so rare for the market to do stupid stuff every single day, like go straight down all day. Like after it has a day like this, the market's gonna somebody's gonna put some smelling salts in front of it, and the market's gonna just stall for a morning, and it's gonna be an easy win. You know. Anyway, it's just surviving and knowing that you can show up and trade the next day. Never risking more than you can afford to lose, not flinching at a loss, just taking the trades. Look, I've got my level right here. If we're above 63.50, okay, if we're above 63.50, we can have a winner. If we're above 63.70, we can have a winner. If we're below 64.30, 64.40, we can have winners. So this is what I'm watching as far as my mapping for the day. If price is back here at all, that's a winner. That's a winner. These are winners. The day is done. But when you're making the decision based on how bad it feels at 10:30 in the morning, there's still a lot of trading left. You got to believe in the power of these market makers because they do amazing work behind the scenes every single day, and they've been doing it for 70 years. Whether we've had bull markets or bear markets, market makers are delta neutral for 70 straight years making markets. Okay? And they make money. And they do so by producing guardrails. And usually the markets don't run amok. And when they do, then yeah, they hedge. So our job is to make sure, like, when the day does something really stupid, we just don't risk too much. That's all we can do is not risk too much. Okay. So the day is not done. David says just filled Iron Condor at 620 credit. So are you, what's going on there? Did you close out for, is that a loss or did you just take the trade and fill? Like, what are you trading, man? Are you 10 wide to get in 620? Because that's a great trade. Okay. So I mean, David, give me some insight, man. Like what are your lakes? You sold what call level, what put level? Are you neutral at all? Are you biased? I'm just curious, like for a $620 fill or 620 credit, if you're 10 wide, okay. All right. Um, okay, David says the one you posted. So you just got filled, so you're in the trade for $6.20. So the nice thing is if that's your trade, you're only risking 380 bucks. Okay. The bad side is you need to see price get back above 63.70 if you took the trade that I took. If you're at 63.70, you need to get price back above that. Or if you're at 63.50, you need to see price back above that. Right? So it's just like, what is the trade? Yeah, I got you, man. Okay. I mean, yeah, I hope you get 100 bucks. That's great. Okay, give me a second here. All right. Venkat says closed out all my trades. Venkat, you in profit? So bear call combo. Yep, very nice. Bear call combo right here is up 90. It's like I'm literally sitting on my profit target. It's not closing me out at 5 cents debit, but I refuse to let it, like, I'm not going to take 90 when I can make 95. I'm not going to take anything less than 95. So it's sitting right there at 5 cents. This should close out for profit, but it's literally like almost all of my credit, you know? So, I mean, I either one, I leave it here at 5 cents debit to close out, or I just cancel this trade and let the whole thing expire for a dollar credit. Okay. But right out of the gates, bear call spread was pretty nice. Nice, Rich. Yeah, let's take a look at those waterfalls. So this one is up 100 bucks. This one's up 105. This is waterfall income. This is what I'm talking about today. This is the master class I'm doing today. 160 up 100 bucks. 102 out of 125. I'm going to see if I can close this one down. This one I set the take profit at, let me see here, SPX. I think I put in a 25-cent debit. Trade at 20 cents. Come on, give me 15, 20 cents, would you? If I can get 20 cents, at least makes me 100 bucks. Not filling. Um, Let me try. Yeah, I'll let that one just marinate a little bit longer. I mean, these are good. Yeah, if I can get this one closed out for over $100, this one's over 100. I mean, it's 112. That's good. What are your thoughts on a 6310 by 63? I don't like it, Tom. That's way too little credit, dude. $930 risk for 70 cents credit. No thanks. I'd be willing to take that trade for like a dollar 50, maybe $2. But yeah, I mean, it's probably a high probability. It's a high probability trade. I know that it is. It's going to be difficult for prices to get down to 6,300 today. That'd be a 2% sell off. The VIX would have to rip to like 25 or 30 today to get that level. But 70 cents, I'm just thinking risk, man. 70 cents profit for a $930 risk. It's like, what if price does drop to 6,300 today? Now Tom's on the hook for a $900 risk. I don't think it's worth it. But if that trade is offering like a dollar 50, $2, okay. I'd be willing to stomach that. Like, okay, I risk 800 bucks to make 200, but get a good fill. All right, 63.50 seems to be holding up. It does. It does, but I'll ask you this. Do you want to sell a put at 63.50 hoping that's the bottom? I mean, we're down 0.94%. If the market's going to sell off, is it easier for the market? Exactly, right? Venkat says, no way. Exactly. I'm the same way. It's like, that's not the bottom. Now it's a good fill, but my plan now would be like if I'm gonna guess the bottom, I'm gonna get filled at like a 1-to-1. So the trades that I took here, that's why I posted those trades earlier. This trade here, this is, let's see, these are all calls. There's no way those are gonna get filled. Um, Okay, these trades. So the 62.90 by 62.80. If that offers me like $2 to $3, I'll probably take that trade. But I'm putting in at $5. Okay. If I go 10 wide, I get $5, pay me, right? Like pay me 1-to-1. I'll risk 500 bucks to make 500 bucks if that's even going to be an offer, but price is going to have to drop another 50 points. If price drops another 50 to 60 points, same thing. 85 by 75, pay me. I'll risk 500 to make 500. Okay. Now, the odds of those trades getting filled today are pretty slim. But if I'm going to get them filled, I might as well do it where I'm taking on a fair reward to risk. Okay. And as I've said, like, I mean, I don't know how many thumbnails I can go back to here, but if I go to, okay, I don't know if you can see these thumbnails, but this is, higher or lower, August at all-time highs, markets don't care about inflation, technical correction coming, key resistance levels, VIX is above 20. Like, I mean, I've been pretty persistent here for about a month. Like, I understand the melt up in July. I saw the price action here through July, right? We had this July 31st, August 1st, big like volatility shakeout. This is when the VIX actually jumped up above 20 for a second. Okay. That was a bit of a reality check for the markets. And we went right back up to these highs. Okay. I did not think this was going to be a sustainable run going into the late July sell-off into an early August rip. I did not think it was sustainable. Okay, I have just simple technical reasons to believe this market should correct. It's nothing more complicated than that. I don't care about Trump or the Fed or what's going to happen, what's the economy doing. I don't really care. I look at the markets and honestly, these are self-fulfilling. This indicator has been so reliable for 20 years of trading. I use it. And it's overbought with divergence, which means at some point this price momentum, these money flows, they're going to stop. They're going to decline. They're going to change a little bit. And that just offers a bit of a correction. Okay? Because if we're going higher, 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 then you're going to hear me talking about freaking bubble at some point. So this is actually good. This is good. that the market is correcting a little bit. Now, how deep does the correction get? I don't know, but I would imagine if you look at support and support and support and support, these are probably levels that the market can have its little correction and then offer us a chance to buy discounts. Okay. Again, I've talked about this at length, ad nauseum, with waterfall income, double up alerts. Because if the market's offering up a good discount trade, we can take a trade that offers us a 100% gain on a risk or better. So, for example, if I were to get a trade where I'm like, I'm going to buy a call, sell a call, I can get, let's say, I don't know, if I go a dollar, if I have a dollar widespread, and I pay, let's say, 45 cents. Well, that means I can make 55 cents. That might not seem like a big deal, but if I can make $550 while only risking $450, that's a good trade. And if we get it at a discount where the market's going to still find a way to get back to these highs again, awesome. But this correction probably need to happen. And now that it's rolling over for 2 whole days, it's like, how bad does the news make everything feel today? Markets in turmoil. The dumbest thing ever that CNBC created. Okay. All right. So what we got going on here? IWM interest rate plays correct. That's take profit last week, reenter. I'm just gonna hold it. Yeah, you already took profit on that, right, Sean? I'm just gonna hold IWM for right now. Um, yeah, we'll see. Okay, VIX is up to 17, which means we got about a 1%, just over 1%. 17 divided by 16, a 1.06. Markets have already made a move from the close. Markets are already down 1.04. So if there is a bottom today, we've already hit kind of the VIX measure based on this current VIX at 17. So if the VIX stays maxed out around 17, we probably hit a bottom for the day. But if we sneak up to 17, 17.1, 17.2, 17.5, then yeah, we slide. And this needed to happen. And it's okay that it is happening. It's just we want to make sure that we're making money. Okay. Yeah, I'm with you, man. I'm still in IWM too. 63. Tom, do you want a bottom so bad or what's up, dude? You want a bottom? Is that how bad you want a bottom right now? You just want to be in a trade? Just let the market do its thing. Look, I'm calling. Here's what I want. If I could sell like a 6,300 or a 6,290 or 62, like I want bottoms down here. It's rare that we see a 2+% move in a single day. Yes, it happened earlier this year when everything was wild and crazy during Liberation Day and Trump and this 2%. Like we had gaps and nuts days. In a standard like intraday move, it's rare that we're going to see 2+%. So I'm just all about reward to risk. I'm not trying to call the bottom today. If this thing's going to flush up, the VIX is going to go to like 17.2, 17.5. I do not want to step in the way of that. Do not call the bottom if the VIX will not stop going up. Okay? Because when the volatility suppression is gone, like 17, things are like a little iffy. At 18, 19, there's no more volatility suppression. That's why when you can go from a 16 to 20 VIX, it goes from 16 to 20 and then spikes to 25 or 30. That's what gets everyone in trouble. So you got to watch the VIX carefully because that is the fastest way to blow up your account. If you're going to see like, I mean, the VIX can blow the lid off and go from 17 to 30, you know, and that's not in our control. So don't call the bottom today. Don't call the bottom. Now, I say that, and I am willing to say that a $5 fill at a 62.85 Well, that means that price literally has to come down to it. A 62.90, let's see if price has to come down to it. Okay. And for the day, it's like just to put risk in perspective. I'm down about $11,000 today. Okay, that's 0.2% of my account. 0.2%, not 2%, 0.2%. So way, way, way less than 1%. I trade small. I trade often. This is why win, lose, or draw. It's like I get annoyed at losses, but I know that it's never going to be a huge setback. Losses happen. I wish I never lost a single trade, but losses happen. But you gotta be able to grind through them. You know? Yeah. So and to say like, well, that's because you're trading, millions of dollars. It doesn't matter. It wouldn't matter if I was trading 100K. If I'm trading 100K, I still want to be down less than 1%. It's like that's how I'm managing my portfolio. It's like I have I mean, 15 years of managing money has been all about risk management. It's the only way that you can survive because you're one stupid trade away from not trading anymore. You know, like, and again, how do you learn this stuff? Well, what'd your portfolio do during April this year? Like, I was down about 6% during that entire chaotic, like 20% decline. I was down about 6%. I didn't like being down 6%, but it was a manageable drawdown. I was selling more premium. I was thinking that with the VIX at 30, 45, 50, 60 when it spiked, if I'm selling premium, we're going to have like a VIX reversion. And we did. And I got lucky from like April to May to June. All of my premium that I sold was like 90+% profit within like 30 to 60 days. But you stomach the drawdowns. You have to be brave when the markets are down a little bit. You have to give those big wide margins for error. So I emphasize all this stuff. Okay. I'm going to switch gears here to Profit Panel. I do have a link for Profit Panel in a second. If you'd like to join me, let's continue this conversation. I'm going to split this up with Kane and Alex today. I think Sean sent me a message today. Yep. So here's a link if you want to jump into the session at 11 o'clock with me. So 11 o'clock Profit Panel. Come join us. We'll continue this conversation. But the trade that I'm going to be teaching today at 1:30 is going to be part of my waterfall income masterclass. And this is one of my favorite full-time passive income retirement strategies. Like I will use this trade forever. To me, it was like one of the biggest light bulb moments for the last like 3, 4 years of, my gosh, you can trade and make this type of income every single week with like a 10 to 15% buffer. Yes, you can. And to do it with defined risk. So even if the market does go like silly and it's down 15, 20%, you're trading price and time only with risk defined trades. Okay. That is very helpful. Risk defined, meaning that the market could drop 30%, 40%, and I'm actually not risking any more than what I originally put on the trade, right? And to go one step further, I could also own the underlying. I can either take the defined risk loss or I can own the underlying and repair it. And I mean, I've got a trade that I'm doing that right now with since December. $330 to the downside was a loss that I'm now repairing for close to 5 grand in profit. It's taken, 7 months to do it, but after my first month, I was already in profit. My second month, I'm making income. Third month, I'm making more income. And I've just stacked down the income where that trade, which is down $300, is now like a 5K swing in my favor. So if that's even remotely interesting to you for something that's really simple, that's. I mean, again, I'll say straightforward. I want to make sure that you might have to learn this strategy. I might have to teach you this strategy, but there's a reason it's like a go-to bread and butter trade every week. Lots of forgiveness, lots of margin for error. And so if you're always like cautiously bullish, I get it. I'm cautiously bullish too. By the way, the VIX is going up. Okay. So, um, yeah, I mean, we'll see what the market does. I'm still looking to see maybe I get a good fill down here. If I'm going to take those bull put spreads, they're going to be way the heck down here. Okay. This market has not stopped for an hour and 24 minutes. It's been down. Look at this thing. Okay. The day is not done, but this is a silly little move that for a plus minus 27 on the day is already down 65 points. It's over double what was the market maker expected play today. But as I said yesterday at the final hour session, rolling over, I expected this market to slide down. It's the perfect time to do it. Nobody's paying attention. Maybe people aren't even checking their portfolios. This little, 1% sell off today, maybe it matters to us because we're watching it live. But in the bigger picture, all this is doing is offering the dip that I think a lot of people should participate in. I'm going to. I want to participate in dips. I'll do it with risk defined trades. Okay. Penny, yeah. So if you jump into the profit plate today, I'll talk about it. So if you come into profit panel today, I will be talking more about waterfall income. And if you're interested in learning more about it, I'll talk about it. And I've got a masterclass today at 1:30. And again, the masterclass, like we spent all day yesterday talking about the core strategy, and then I've added a wrinkle to it over the last like 6 months of trading that helped us navigate this entire drawdown this year. Like we took one losing position through the entire 20% dip. And every other week it's been positive, 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 positive. We've had 93% of these trades be winners since last year. Okay. So, I mean, again, I'm not sitting here like, you know, begging you to come and learn to trade with me. But I'm going to show you like strategies week to week if I can make pretty safe income and do it with a huge buffer and a huge margin for error. I love that trade, because if there's one thing that we do know, like the certainty is there's going to be uncertainty. And I think that we've seen it this year. Like Donald Trump is constantly uncertain, constantly like we don't know what the guy's going to say. The markets, cared when he first came in this second term. The markets care a little bit less because I think the markets understand like this is pro growth, this is deregulation, this is win at all costs, and there's going to be some volatility ahead. But if you think out like 2 years from now, 5 years from now, 10 years from now, I'm pretty sure that regardless of what the market throws at us, if the market's had like, oh my God, in the next 10 years, we had another 20, 30% correction. Okay. We had a legitimate bear market. Okay, fine. But what does it mean in the long term? You know? Because if you're so fearful, you think the entire financial market's going to implode and never be the financial markets again, I think it's too big to fail. There's too much riding on, I don't know, $400 trillion worth of leverage in the environment. Like the global economy is like leveraged out to like 400 to 500 trillion dollars, and that's all tied up in derivatives in the financial markets. So I don't think it's going anywhere, and everyone wants to do well. You know, countries' livelihoods ride in this. You know, the wealthiest people that control everything, their wealth rides on this. So yeah, I'd say we manage risk better, but we continue to participate when the market offers us discounts. Okay, be that trader. If you can take one thing away from today's conversation, it is just because the market's down a couple percent or the market's down 5, 10%, you should look at that as an opportunity, no longer something to fear, right? The way it gets feared is because you're already fully invested and you don't have any downside protection. That's when it sucks because a 10% correction could be 10, 15, 20% for you if you're leveraged. But if it's a 10% correction that you're only down 1 or 2 or 3%, well, you're managing risk better. And now you also have the cash and the dry powder to get back in, participate at a discount, and get back to those highs. My favorite part about, if I'm managing risk properly is when we saw the markets down this year. So I was at an all-time high right here for my portfolio. Even though the market was down close to 5 or 6%, or actually closer to 10%, I was already at an all-time high for the year. Okay. And then the market was down and that all-time high obviously was lower. But when the market got back to here, I was back to all-time highs. And so this entire melt up has gone to all-time highs. This all-time high for the year was 195. This all-time high over here was like 205. This all-time high is 420. Actually, it's 427. So 195,000, 205,000, 427,000. So how did I make that much more money when the market only went up like another 10%? Because I was participating at these lows. I was participating as I thought the market could go higher. Like that's where big wealth and big jumps in your gains are achieved is by taking advantage of those discounts that they don't happen very often. When they do, it's nice to participate in them. Okay. All right. Yeah, all good. if anybody wants to see the recording, we can probably get a recording too. It's cool. Let me do this. Let's switch gears. I'm going to go to Profit Panel. So I'm going to jump in that session with Alex and Kane this morning. And if you want to hear more about waterfall income, you're welcome to. I'll probably start talking about that around like 11:45 or noon. My class today on that is going to be at 1:30 p.m. Did I post that for everybody? Nope. Shoot. Let me post that again. Okay, so that is 11 a.m. Profit Panel. So you can click on that link, pressverdypub.com/profit panel, jump in the session. I'm going there right now. We'll wrap up today. So far, look, bear call spreads are looking good. And for the rest of the day, I've got two levels. If you got filled, I canceled that trade, but if you got filled at the 63.50 put, all you need price to do is stay above it. I got filled at an iron condor with 63.70. If price stays above that or gets back above it, then I still win the day. But my bear call spread is the primary trade I took this morning. That was my focus, and that is like up 95%. So I'm just going to let price do what it needs to do. I'm going to rely on the market makers doing their thing. If I have to manage, this trade for a break even today, I'm okay taking break even too. But bear call spread's looking like, I mean, I'm not going to say guarantee because it's never a guarantee, but pretty likely that we're not coming all the way back to like 35 or 40 today. Okay. But it seems like we are kind of hitting here at this 63.50. It does seem to be holding. The VIX is kind of contained around 17 right now, but the day is not done. Okay. So it could be down for the day and then maybe a little retracement later. We'll find out. Maybe it could be down for the day, pausing, and then FOMC makes things worse. I don't know. But we're still winning the day. Okay. All right. I'm going to jump into Profit Panel. See you then. And come back and grind with me later today. So I'll get my watch this Wednesday. I need to see if I can get an access token for my pinch point. So I'll send out hopefully some trades this week on pinch point. We'll come back and grind for daily profit plan tomorrow. I will be live on the waterfall income today at 1:30 p.m. for my masterclass. And then at 3 p.m. today, I'll be doing my final hour session. That's on YouTube. All right. I'll see you soon. Thanks. Bye.